Mr. Greg, what are your thoughts on yet another turn to the dark side in BTC, sir?
So I think one of the things that it's really interesting to keep in mind is a lot of this seems to be driven by the macro monetary environment. So last week on November 21st, we had the New York Fed governor come out a little bit more dovish than the market expected. He was saying that on balance, it's probably better to cut than it is to not cut in the December 10th meeting. So that set markets rallying on Friday and then all of last week, which is kind of the holiday week, which is typically kind of a bullish week anyways. Markets are thin. There's not a lot of people unloading paper during the Thanksgiving week. And so we had a catalyst and we had just kind of a rally all week. So that made a lot of sense. Monetary easing, dovishness from the US. And then today we have sort of hawkishness from the Bank of Japan, which essentially had about 20% probability of a rate hike for December 19th, now something like 82% probability for a rate hike in the front end for December 19th. And why do we care about Japan? Well, Japan is still the biggest buyer of US treasuries. So if there's hawkishness in the Japanese markets, then theoretically that kind of translates out to the US treasury markets. And so what I think is happening is we had a dovish catalyst last week, and then we got a reversal hawkish catalyst this week, and Bitcoin's just swinging around in response to that. One thing that's interesting to keep in mind, though, is that we're seeing divergences between Bitcoin and precious metals. So silver is going haywire right now, something like $59 an ounce. And then gold is still headed back towards all-time highs, which was around 4,400 an ounce, and that right now is around 42.75, something like that. So I think the big picture in terms of precious metals is still a trend higher, but in terms of easy money, risk assets, and somewhat related to Bitcoin, we're kind of being swung back and forth here on monetary policy.